You might get what you're after. Cool, baby. Hi, Trader Tina here, once again from ShortMeTina.com with my daily recap. I want to say today is Tuesday, right? Correct me if I'm wrong. I think it's Tuesday. COVID. I saw this very funny post on Twitter where someone says COVID essentially has it that we just have 3 days: yesterday, today, and tomorrow. And I really believe that. I never know if it's Friday, Saturday, Wednesday. It's just yesterday, today, and tomorrow. So I'm doing this video now, so I'm going to conclude that it's today. But no, I do believe it's Tuesday. So happy Tuesday. Do me a solid before we get on. Like the video. Someone, one of the subscribers in my post, I believe it was Maverick, right? Shout out to Maverick. He said, you know what? Like video first, then listen, then comment. I actually like that idea. So before you get on the way, do us a solid. Like this video, and after you've listened to it, be sure to engage and comment in the comment section. While it does not happen right away, I generally make it my business to reply to each and every comment because, that's the reason why I started this, just to really build that community of traders to engage, to see what others are doing, and to essentially, I guess, document and journey my life as a trader for the past north of 20 years. I'm going to be doing this until the day I die. Seriously. But anyway, so let's jump in really quickly to a recap. As usual, we always kick it off with the overall markets. Right now, what's on your screen is the SPY S&P 500, at least an ETF that mirrors the S&P 500, and we are looking at the hourly chart. Again, I do videos every single day. There's times where I focus on the daily time frame, the weekly time frame. I've even gone back to the monthly time frame. Today, I'm going to focus on the hourly, not because the others are irrelevant, but because I've discussed them often. So if you care to see the picture of the SPY sort of on a larger time frame, make sure you just go back and click on any of the videos I've done within the past month or two, taking it from the hourly, specifically paying attention to when this whole collapse started back in we want to say mid to late February, where you can clearly see here the SPY was in a downtrend. And what's a downtrend, right? A downtrend, as I've stated before, is characterized, right, by by lower highs, right? So you have this high, then it's a lower high, then it's a lower high, so on and so forth. I always say, think of it as you're stepping downstairs. That's the characterization of a downtrend. And so typically speaking, I said, well, the market is in a downtrend unless it has bucked this trend and created a new one, right? Which would be the exact opposite, an uptrend. What is the characterization of an uptrend? Well, opposite to a downtrend, it is characterized by higher lows, right? You can see it here. So on this day, let's say the low was 233. A few days or a few hours later, the low is 245. A few hours later, the low is 253. So the lows keep getting higher. That is an uptrend. And so we can say we buck this downtrend. You can see it here. Look at the cursor. That's the downtrend. We bucked it here when this ETF gapped up on March 23rd. So in many respects, on the shorter time frame, we have changed trend. And so the question that you're asking myself, I'm asking myself, we're all asking ourselves, was that March 23rd low the bottom, right, in the SPY? Because from the peak to low, that's a percentage decline of well over 30%. I think it was 35% at the peak, believe it or not. 35% in 3 trading weeks. That's insane. That's a fast crash. And so a lot of folks are asking themselves, well, is that it? Is the downtrend over? And I've argued, right, although I'm very much so open to the market dictating and telling me what it wants to do, I am skeptical just based on a lot of other things, and a lot of it doesn't have to do with the technical picture, although the technical picture does state that, well, the chart is severely damaged because of that 30% downtrend. But for me, I'm skeptical that we've put in this low because of a lot of other things that's going on. Not just the U.S. You have countries right now that's in complete lockdown, meaning folks are in their homes, right? No one is spending money or not that much money. A lot of people have been laid off. Last week, I think unemployment claims came in at over 3 million. the average is like, let's say 200,000, 300,000, 100,000. It came in at over 3 million, and that's just the first number. What happens with some of those companies that delayed laying off, right? We can the next unemployment number, we can have double that. I can't, maybe even triple that. Who knows? So at risk of betraying technicals, which I will never do, I'm actually paying attention to what's really going on out there in the real world. And even from a technical perspective. So I talked about this yesterday, not to be all over the place, but just follow me. I even talked about this yesterday where I'm looking at this line here over under, because you can look at the hourly, you can see that, granted, we were in a downtrend, we bucked it here, uptrend, and then I want to say for the last few trading days, today would be like the fourth, we've kind of been trading what I want to say sideways or in a range, and I drew this line stating that, anything above 249, I'm inclined to be a little bit more bullish. Anything below, again, on a shorter time frame, anything below, then I feel like what we have here was a dead cat bounce. Anyway, back to those fundamental pictures that I've been looking at. I was actually reading this article here on Bloomberg. I'll probably link it in the description. Give it a read when you have a chance, right? So today's March 31st, tomorrow April 1st, and the title says, nobody knows what will happen when the rent comes due on April 1st, right? Very catchy article. And then you read this, and it really talks about the fact that on April 1st, 81 billion in rent payment comes due, right? 81 billion. That's a lot of money. And then it talks about, most agree that laid off renters and shuttered retailers are suffering. Folks might be postponing or delaying their rent and mortgage payments. Like, this can have real ripple effects on the economy. And I'm not going to, again, go through the entire article. And then it ends with this, and I actually think this is really interesting. The person said, I'm less worried about April 1st, right? Because April 1st is kind of like, I think we all went into lockdown, let's say maybe 2 or 3 weeks ago, right? For me, it's relatively early. I'm less worried about April, right? Said Bruce. He's more worried about May 1st. Once people miss 3 or 4 paychecks, that's when things get bad. So I guess he's saying that, a lot of folks have, I guess, maybe some money or reserve, although I'm sure there's like an article floating out there that says that most folks don't even have $500 in an emergency account to cover expenses. I think not most folks, but like maybe 50% of Americans, which is a whole lot. But let's just say like some folks through credit cards, maybe the stimulus check, unemployment, might be able to have the money to pony up, like, let's say, this month's rent. But what happens when, again, they're not getting paid for 3, 4, possibly 5 weeks? That's alarming. So for me, in addition to looking at the technical picture, in addition to looking at the fundamentals, what's going on, I mean, think about it. Theaters, there's not a theater or a movie theater opened. Broadway completely shut down. Restaurants, some of them, some that can, are operating at like minimum capacity, meaning they're doing just deliveries only. Malls, retail shops, all closed down. So you effectively went from companies making millions, billions of dollars to like all of a sudden zero. Like, that's going to have ripple effects. And so one of the other things that I've been paying attention to, you guys know that I use Tradingview. I may or may not do this, but haven't really announced it. But I do also have a partnership right now with Tradingview. I use them a lot. I actually like them a lot. Where if you sign up for their services, because it's an affiliate link, I get a portion of that proceed. But I'm not telling you that because of that. That's just full transparency. I have to do that. But I actually like the fact that they're actually graphing worldwide, USA, Italy, and other main countries. They're actually graphing the COVID statistics, and I think that's really important. I'm gonna pay attention to the world, more so the USA, because we are the leader of the free world right now. We are the highest in terms of infections, and so what I'm gonna be paying attention to is how long or when we start to get like a handle on this, right? They talk about the flattening of the curve, right? And let's see if I can click on it, if it'll show me. Let's see. Why is it not working now? This is the world. I don't want the world one. But anyway, so when you get a chance, you can do it yourself. But that's exactly what I'm paying attention to. Paying attention to the U.S. and seeing right when we start to flatten that curve. Because I think once we get a handle on that, that's when things can kind of get back to normal or quote unquote business as usual. So again, paying attention to the technicals, paying attention to some real life fundamental things that are going out there. I mean, if people are in their homes, they're not working, they're really not spending much money because their employers have either laid them off or reduced the amount that they're getting paid. Like again, that all of that has ripple effects on the economy. So, and what caused it? What caused it is the coronavirus. So for me, paying attention to, let's see if we can get into the U.S. once more. There you go. I guess I have to click on US. Paying attention to when this curve starts to flatten out, which it has not, as you can see, we're still trending up. But once we start to flatten out or trade sideways, that consolidation, like I always talk about in with other stocks, technicals, once that starts to flatten out, then for me, we've gotten a grapple on the disease, and more than likely, restrictions that we're seeing in place will start to loosen up. Hope that makes sense. I've blabbed. Comment in the comment section. Let me know what your thoughts are. What else? All right, so let's wrap it up and round it out with ticker SGBX. It actually came on my radar after hours. It's up a whopping 350% on the day. Can you imagine 350% just on the day? Yesterday, the stock was trading at around 1. Today, in after hours, it's trading at 11.95, which is about an additional 28% from the close of around 9:30. So clearly, stock is on a run. And why is it running like this? Well, the float is not much. It's actually under 1 million. I believe it's about $250,000. So makes sense why the stock is appreciated close to 400% in one day. Is to run over? Actually, these types of stocks, they can run really fast, really hard. So don't advocate shorting, even if you can find shares to short, which it might be very hard considering the float is relatively low. But again, so this red line here is resistance, and that's essentially where it's trading at in after hours. But I would definitely, although it's up again north of 400% in a day, definitely is a stock that I would put on my radar because honestly speaking, trading at around 11.95, 12 and after hours, the stock can actually still double. It can still get to 24 and even beyond. Like I could still see this running to 30, 35, 40, 50. So I'm going to put it on my watch list for tomorrow as a potential trade for myself if the conditions are right. And I'm just pointing it out to you so you can look at it as well to see. Okay, that's my Yorkie anyway. To see if it'll work out for you as well. So let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. 1, comment in the comment section. What did you think about my monologue on the S&P? The SP 500. Again, like, comment. 2, I do videos every single day. Make sure that you're subscribed to our YouTube channel. And the last thing, 3rd, right now what we're doing on our website is we're hosting a free 14-day trading course, essentially detailing a lot of the things that I've learned trading the stock market for the last 20 years. I mean, if you find yourself struggling in the markets, you have all this downtime, you're quarantined, you don't know what to do with yourself at home, learn about the markets. Find a way to make that extra income if you need it, right? Because we're about to enter we are right now functioning in really unprecedented, uncharted territories. Expand, expand your knowledge, expand your way of being able to make money, learn a new skill set. So again, right now what we're doing is that 14-day free trading course. I don't need your credit card, just your email address. I can know where to send the course to. So if that's something that you're interested in, definitely head on over right now to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow. Remember, it's only 3 days. Yesterday, today, and tomorrow. I'll talk to you tomorrow. Stay safe.